Meanwhile, moving on to the big story of the day, the RBI has announced that it is keeping the repo rate unchanged at 5.25% while maintaining a neutral stance. In fact, the RBI governor added that headline inflation remains above target and is no doubt a concern. My colleague Ankur Mishra is here with the details.
It's a no-change policy from Reserve Bank of India this time, but a lot of takeaways from the commentary of Reserve Bank of India. First and foremost is the growth and inflation dynamics, whereby Reserve Bank of India has now reduce the forecast for inflation by 10 basis point to 5% for FY27. And in that, Reserve Bank of India clearly mentioning that core inflation is something which looks to be aligned, and if you also reduce the precious metal out of it, it remains well within the range. Apart from that, if you talk about the growth, the guidance has been increased a bit by 10 basis point to 6.7%, but importantly, Governor says that even 7% growth is possible for FY27. Apart from that, there has been announcements on the harmonization of interest rates, and Governor did mention that polymer notes may be available by Q1 of the next financial year. Governor also stated that as far as the upper layer list is concerned, whereby Tata Sons is awaiting whether it will be there in the list or not. The list is expected to be out soon.
In fact, after revising India's GDP forecast from 6.6% to 6.7% in the back of a resilient economy, RBI Governor Sanjay Malhotra told ET Now's Ankur there that India may hit the 7% mark this year. Listen in.
I want to understand your sense more on GDP front. In last to last policy, of course, the FY27 forecast was 6.9%, then it came to 6.6%, and now we are at 6.7%. Given in the first quarter itself, you are saying 7% growth is possible. Is there a scope of overall 7% growth for FY27 which is possible, considering the fact that the data which has come in the past also has been better than what was forecasted?
The 6.7% growth that we have estimate, the outlook that we have given is an estimate. And we have also mentioned that the risks are evenly balanced on both sides. We also give a fan chart to give, the relative probability distribution. So if you look at the fan chart, it will suggest that there is a possibility that the growth, to answer your question, there is a possibility that the growth may be 7 or more.
And even as the RBI lowered that inflation forecast and raised the GDP expectation, SBI Managing Director Ramamohan Rao said that upside risks cannot be ignored, but that the Indian economy is still very much resilient. Let's listen in to that soundbite.
Particularly the very fact that the GDP growth rate has been projected to be even 10 basis points higher than the initial estimate also indicates that India is able to maneuver and we are able to demonstrate our resilience. But the talk of upside risks is only around to caution and kind of preparing the entire ecosystem players that more needs to be done in terms of we can't ignore those risks. And we continue to look for diversification the way it happened in terms of exports, etc., when there was headwinds were there in the trade. I think this is an indication and reiteration that risks are continuing, but at the same time, India's economy has demonstrated resilience.